Hello, good morning. Welcome to our usual weekly market breakdown with Legacy Capital. If you're just joining us and you have not been following our channel, make sure you subscribe to our channel, you like our videos, don't fail to leave a comment and also to share our videos so that anytime we drop a new video, you should be one of the first people to be notified. We will be looking at fundamental analysis. We will look at the dollar index. We will also look at Great Britain pound. We will look at the euro and possibly look at gold. So let's write you through. This week on Monday, we don't have any specific high impact news. And in looking at the fundamentals, you see that for the fundamental news on Tuesday at 7 a.m. for the Great Britain pound, we will have the claim and count change. We'll be looking at the number of people that are claiming unemployment in the United Kingdom, and they are forecasting that it will be 30.3k. If you look at the previous was 44.2k, and this week we are looking at 30.3k, which definitely shows that the number of people that will be claiming unemployment on Tuesday in the United Kingdom will be far less than those that previously claimed. And on Tuesday we have the consumer price index for the Canadian dollar. For the consumer price index, if to say that the actual becomes greater than the forecast, it will be good for the Canadian dollar. And on the Wednesday 7 a.m. we also have the consumer price index for the Great Britain pound, which of course is indicating here that we are forecasting 2.7. So if the actual comes out to be greater than 2.7, it will be good for the Great Britain pound. If it is less than 2.7, it will not be good for the Great Britain pound. And at 1:30, we have the core retail sales for the United States dollar, and I can assure you that the core retail sales for the United States dollar might have a little bit, or there might be a little bit drop down because of the tariff war that is going on. Talk more about the rate. And at 6:30, Fed Chair Powell will speak. I expect to see a lot of volatility in the market at 6:30. Anytime Powell speaks, there is always a lot of volatility. Thursday at 2:30 a.m. we have the employment change for the Australian dollar, and we have the unemployment rate on the same Thursday at 1:15. We have the main refinancing rate and the monetary policy for the euro. And at 1:30, we have the unemployment claims for the United States dollar. And at 1:45, we have the ECB press conference. For the XY, you'll notice that our analysis of last week was top notch. You recall very well that we started analyzing the XY on the daily time frame when it was at this level. We actually made a projection that if to say that the market starts from here, then shoots up to this level, it can retrace from here right down to this zone, which of course was a daily key level. Let me take out the key levels that we have here. Of course, we have this level, which of course is the key level. Then what we can do now is that we can just maybe zoom our graph and see any other key level. If we notice very well, this level has been taken out at this level. So this resistance, the resistance at 109.205 has been taken out. So what are we expecting with the XY? We are expecting a further drop, and if there is a further drop in the XY, what should we be expecting? Which zone maybe will the XY take us to? Which zone will the XY take us to? Let's check from the weekly time frame to see if we will have a weekly key level. Let's see if we can have a weekly key level. Okay, perfect. So this level has been broken. This level has been broken completely, and the market now is pushing towards this other level. So our expectation is to see that the market pushes down to clear out liquidity within this zone, and maybe possibly the market can also move right down. Let me clone this. The market can move right down. The market can move right down to this zone. So this is our expectation. Since the market has taken out this level, we should be expecting to see a further drop. So with the DXY, what should be in our mind is to see that the market moves down. The market could maybe open with a gap, then continuously or maybe continuously maybe move down to this level. And if the market gets to this level, we can be expecting to see a slight retracement. We can be expecting to see a retracement from this level, then maybe back to this level, then break it and then continue moving down. That's what we should be expecting with the DXY on the weekly time frame. On the weekly time frame, on the daily time frame, what should our expectations be? Our expectation with the XY on the daily time frame is that first it can move to this key zone directly, it can move to this key level and stop there, then maybe retrace from there before falling down. That's our first expectation. Or better still, the market can open and it pushes up right up to this demand zone, then retrace from there to this level. So we should be expecting these two scenarios as far as the daily time zone is concerned on the XY. Now, if we move to 4 hours, let's see if we'll see some clarity on 4 hours. On the 4 hours, you see clearly that the market has created a lower high at this level and it's already retracing from there. So there is a possibility that the market can open with a gapping and keeps on moving down, so that we see the market push right down to this zone, then maybe retrace from there to test the lower high that it had created before it jumps down. So that's what we should be expecting. So we expect on the 4 hours that the selling momentum continue, clear out all these lows, then touch this daily key level, then retrace. Maybe it can form a base before reaching that level, it retraces to the base, then it drops down further. So our expectation is to see a movement more like this. This is what we expect to see on the 4 hours. The market drops down to the daily key level, pushes back, then drops to the weekly key level. So that's why let's move to GBP USD, that's the pound sterling, on the daily time frame. So from the daily time frame, we'll notice that the market actually pushed down on Monday. It pushed down our expectation from last week. If you watched the last week video, we're expecting that the market could push right down to this 4 hours order block before retracing, but somehow the market did not get to the 4 hours order block, but the market retraced. So we did not get it from our level, but as soon as it got to this level, we tested this area that was actually, if you look critically, this area had initially acted as resistance. So it was a resistance zone. This area at this level, it acted as a resistance. It was broken. It came back to test the resistance and it pushed up, which was why I was emphasizing last week that we should always take note of areas that have acted as resistance. So when it tested it, it gathered momentum from there. It tested this zone on Monday. It gathered momentum from there and then it built right back to the daily key level, which we had drawn. So what should be our expectation this week? Now, there is a probability that since it has a daily key level, there could be a slight retracement. There could be a retracement tomorrow. When the market opens, we could have a retracement. Maybe we have a scenario like the first top, the second top, and maybe the market retraces back to this level where we can have maybe a pattern as such. We can have something like this. Stuff, and then the market has dropped down here, then maybe at this level we are expecting to move down. We could have something like this, but this is not likely to be the situation in the market. That's not likely to be the situation in the market. What we should be expecting is to see into it that as the market opens, maybe momentum, we can have a slight retracement and then the momentum pushes up and breaks it. So since the week at this level had initially tried to break it, so we can see that maybe the market can push up again a little bit. Let's see if we can see or maybe any confluence on the 1 week time frame. Okay, on the 1 week time frame, you will notice that the market don't even, or the market is not intending to end at this level or to retrace from this level. On the 1 week time frame, you are just seeing clearly that the market is planning maybe to push up right to this weekly key level, which is what we will be expecting in the coming week. So we can actually maybe put an eye on what happens on a daily time frame and then see how the market can push through from there tomorrow. But what we should be expecting is to see that the market pushes up to the weekly key level on the 1 week time frame. If you look at the 1 week time frame, you will notice that this area has been acting as a resistance for several weeks. Yeah, this area has acted for resistance as resistance 1, 2, 3, 4 for 4 weeks, but the area was finally broken this week, telling us that the highest thing, or what we should be expecting, is to see that the market can retrace back, test this resistance on the weekly time frame. When the market tests this resistance and we see it going up, so that is what we should be expecting. We'll notice that at the level of the 1 hour time frame, there is also a demand zone there. There is also a demand zone. There is also a demand zone at the level of the 1 hour time frame. So you see that on the 1 hour, if the market is moving down to clear this, to test this resistance and clear this liquidity, it will fall in the 1 hour demand zone. It will fall in the 1 hour demand zone. So we should be watchful to see into it that we have clear confirmations to actually enter the market. From GBP USD, so first on the weekly time frame, what I want us to notice is this weekly key level. We should notice this weekly key level, this weekly resistance zone here. So the market actually has two levels, which for us is extremely important. I would like us to focus more on this zone that has actually acted as a resistance level, which was broken, and directly above it we have the support level. This is what we should be looking at here. So on the weekly time, the market pushes to this level and push back, maybe possibly above the support. But if to say that the market moves just within this area, for the weekly time frame, if the market retraces, tests this resistance and retrace from there to stop at this support, it wouldn't be a problem. That would be a great move. If you take your ruler to see the number of units that the market is going to move, that's approximately 262 pips. 262 pips, that's not bad. So that should be our expectation. But now, if the market maybe pushes from there, if the market pushes from here, and then maybe doesn't get down and then just maybe pushes up and breaks this level, we should also be expecting that it can retrace back to this level, then keeps on pushing up. But I believe as we move on lower time frames, we'll see more clarity with this. So on the daily time frame, I don't think we'll see so much different from what we have seen on the weekly time frame. On the daily time frame, we notice that we have just a resistance level, and the next is another daily resistance level here, which the market can break through to it, that corresponds to a demand level. But we will only consider this if the market fails to respect this. Consider this if the market fails to respect this, but our focus is to see that the market retrace, check the weekly resistance, so test the weekly resistance and push up from there. On the 1 hour, we have a demand zone that corresponds to 1.1192. We have a demand zone here, okay. And one thing we should also notice is that on the 1 hour, though we have the demand zone, we have a demand zone here. We have a demand zone here, and at the same time, the market is already forming. The market has formed a support slightly above. The market has formed a support at this level, which also have a demand area. The market has formed a support at this level. We have the W pattern on the 1 hour telling us that the market can keep on pushing upward. So before we are even expecting the market to test this daily resistance of the 4 hours resistance, we want to see into it that the market breaks this support. So that's what we should be expecting. This is what we should be expecting. But if you look at this, you are seeing, or you bear in mind that the market will buy more from them. We have seen that XAUUSD has actually gathered a lot of momentum. That's simply because it is acting as a safe haven. If you recall very well, in our last week we did our analysis or our prognostics shows that it was going to, maybe there could be a possible retracement to this weekly key level. Then from there now we could see it push up, and it happened just as we expected. It dropped down to that key level. If you notice, the week of this candle came right down to this key level, and from there it pushed right up, and it has been pushing up till it has created a new all-time high. So someone who actually followed the video last week and then mastered the key levels and choose to take it would have met about 2,000 pips just from this month. So that's what we do. So normally now, what is our expectation as far as the market will be open? What will happen with the price of gold? On the weekly time frame, this is the first time gold is getting to this price, 3,237.9. Gold has never been at this price. So we don't have any previous level that we can say that maybe the market could retrace from there. We don't have any previous level. So what we should be expecting is to look at the possibility of a retracement where the market can retrace and gather momentum to keep on buying, because the tariffs war is not over yet. So on the weekly time frame, we can conveniently say that there is a probability that the market can retrace and touch this level. Market can retrace and touch this level. Let me take this off. Market can retrace to the level of this week to ensure there is more fair value gap. So the market can fill this fair value gap, then push up from there. So the first thing that you should be expecting on the weekly time frame as a gold trader is to see if either the market push from there to this level, then moves right up. That's what you should be expecting. Where the market is going to, you don't have a target, but you should just know that the market can retrace to this level and more, or the market can drop down from that level to this level, to this demand zone, and still move from there. So that's what we are seeing on the weekly time frame. Let's just vividly move down to the daily time frame. What we will be seeing with gold is simple. We should just be seeing demand zones. Okay, on the daily time frame, we know that okay, the market can push to this level, which we anticipated this level on the daily time frame last week. The market opened. This was we should be expecting that the market can fall down a bit, maybe to around this area. When the market comes to this area, the market can push right up. So if there is any retracement, we should be expecting that the market should drop from here to this level, then push back up, which of course is almost an impossibility for the market to get back to this level. So let's just move to the 4 hours and then see the possibility. On the 4 hours, we'll see clearer zones whereby we can be expecting the market to move to. On the 4 hours, the only area we should be expecting the market to get to should be this area. We can expect the market to fall right down to this area. On the 4 hours, we should expect the market to get to this base and retrace from there. Thank you very much, and to